Thanks for joining David, Kevin, and myself for the market update for the month of May. We've been having some absolutely fantastic weather. Hope you and your family have been enjoying it. I know we sure have. The Canadian market was off a little bit, so was the global market. The US market, the S&P 500 was up a little bit, and the NASDAQ was really going crazy. It was up almost 6%. I'm going to pass you over to David and Kevin. They're going to get into a little more detail about what was moving the market up and down. And again, hope you and your family are doing awesome. Take care.
So David, what was driving the markets in the US last month?
Well, throughout the month of May, Kevin, there was a growing concern as the month progressed around the US debt ceiling. Eventually, though, towards the end of the month, the U.S. Congress and House of Representatives passed a bill or an agreement to raise the debt ceiling and stave off a U.S. default. It was expected that by June 5th, the U.S. Fed would start to default on some of its obligations if the government didn't agree to increase the debt ceiling. So that was approved officially on June 2nd. And so we've seen a couple of great trading days to begin the month of June. In May, though, in the United States, U.S. inflation actually rose slightly on a year-over-year basis by 0.4%. So bond market yields are beginning to price in now that we may see one more quarter-point rate hike at some point in the United States, maybe in July. So that's definitely going to have an impact on the bond markets and the stock markets as well. And unemployment in the U.S. also rose slightly in May, 3.4% in the previous month to now 3.7%. So even you may think that's a bad thing, but it's actually a good thing for interest rates and the economy to actually see a little bit of softening that will help the inflation story. In the United States. What was happening in Canada, Kevin?
Well, in Canada, the Canadian economy grew at 3.1% for the first quarter of 2023, topping economists' estimates of 2.5%. We're still dealing with persistent inflation at above 4% right now, and that, coupled with the growing economy, has market participants considering whether the Bank of Canada does need to increase interest rates again. Canadian bonds are anticipating another 0.25% hike when the Bank of Canada meets to review policy again on June the 7th.
As always, if you guys have any questions about the markets or how it's impacting your portfolio positioning, feel free to give Harry, Kevin, or myself a call. And for those of you with young families, we hope the rest of the school year rounds out great and everyone's enjoying the great weather.
Take care.